No, we're not going to be doing the demolition on the program today, but this is the Abbey. This is King William Road, and it is our TOOP+TOOP Hyde Park office that we hope to have open by August. For those of you that know the building, it's just the most beautiful building, and we feel so very proud and so very honoured to be opening an office at Hyde Park. Now, for those of you that have been wondering about feng shui for some time, I know there's the doubters, but we'll look into that for you in this program. Also, we go to South Australia's finest, down to Glenelg North, and have a look at a beautiful property there, and then off to Stonyfell for a 3-storey, gorgeous, gorgeous property. Don't forget we're live and interactive. We look forward to your calls later in the show. Well, this week I'm not sure where the earth moved for you, but it did for a lot of Adelaideans with the earthquake. And I remember years ago, the 50s earthquakes, we often talk about that when we see cracks in old buildings and we identify that as the time. Fortunately, not much damage and not too many reports of cracking houses. Later in the show, we look at finance for landlords. The inside story this week, we talk about bigger houses. Is it better to move or stay put? So let's go out in the streets and see what's happening.
Probably renovate it since I'm in the trade. It depends on money.
Having done some renovations, I think it'd be easier to buy a new one.
Renovation is the way we went last time, so we'd probably do the same. Well, it probably avoids all the stamp duty and other sorts of things which add up to $50,000, $60,000 usually for shifting house, thereabouts. So usually by the time you shift house, something about 15% of the sale price goes out in shifting costs, what doesn't fit, plus all the government fees.
Now, I hope you're impressed we're talking about it, because as real estate agents, of course we want you to move house. We'll talk about that more in a moment. But joining me here today is a legend in South Australia. I've known the family for years, but the man at the helm of the largest independent finance broker business in Adelaide, Bernie Lewis Home Loans, is Mark Lewis. Welcome, Mark.
Yeah, thanks, Toby. How are you?
Thanks for joining us again. And
no worries.
You're pretty fired up when you walked in earlier, but we'll get to that a bit later. I just want to talk to you very briefly first about whether moving home or staying put, and as a lead into that, I hear you've got some news.
Yeah. My partner Tanya and I are expecting a baby in the end of October. So,
by the way, this is a TOOP+TOOP scoop, isn't it?
It is a scoop. It is a scoop. Yeah. We've only just started going public about it. So.
Okay.
Yeah.
Well, you're going to go very public.
Very good news.
As of now, you're very public. Now, talk to me. Moving house. What's the financing deal with it? Take your example. Growing family.
Well,
will you extend?
Looking at my own example, I've only got a 3-bedroom home, and with 2 boys who each need their own space, I'm caught in the making the decision of, do I add another room on for the new baby, or do I sell and move? And fundamentally, we're happy with where we live, and so we've taken the choice to extend onto the home, and therefore avoid those stamp duty and other changeover costs, which it's always a balancing act between which way you go.
Now, as an obvious question for a finance man, is there any difference in the financing cost to up stamp a loan, or how does it work?
No. Look, you do actually save on a few costs because you don't incur the discharge costs and the various other government fees and charges. So up stamping an existing loan, provided you've got the equity, and depending on what you're doing with the home, whether it's adding value or I've seen some where they actually detract from the value of the home, provided everything stacks up, that's certainly a viable option.
Mark, you were mighty fired up when you walked into the studio about Sunday's articles and about who's who in the zoo on data.
What a crock. I mean, there are 3 main reporters of median price data, and you've got Australian Property Monitors who are calling it about 400 and something thousand. You got RP data out there saying...
This is the median price you took now?
Yeah, RP data's out there saying the median price in Adelaide is now 377. And then you've got Upmarket, which is the LTO data, and that's the one that I tend to use because that's straight out of the people that keep all the records. That's in the low 3s. So, which one's right? And then for APM to come out and say that, in 10 years' time, the median house price is going to be, was it Smithfield, up over nearly $1 million? I mean, get it. That's ridiculous. I mean, it's always going to be limited by the ability of people to borrow money, and we've come out of the biggest property boom a couple of years ago that the nation's ever seen. We've come out of 2009, where the government had the stimulus boost for first home buyers, so the first home buyer market just exploded. Normally sitting at about 17% of the market. Last year it was 30% of the market. So of course properties went up there because there was such demand in that first home buyer space. Now we're in the black hole on the other side, where first home buyers are virtually non-existent in the market. We're not going to be seeing any large moves in property prices for the next few years.
Well, I think there's a couple of other factors that you haven't mentioned. House prices jumped 203% between 1994 and 2009, 175% increase in the loan amount, and the average weekly earnings moved by 83%.
Yeah.
But the thing that's driving, I believe, what's happening in South Australia is that we're coming off a relatively okay base, so it's not silly pricing. And secondly, we've got the biggest influx of people in history arriving on our shores. We've got the battalion arriving, and they're arriving into the end of the year.
Warfare destroyer.
Right, and you've got the mining cranking up, and there's a very grave shortage of stock. I actually think that unless they release a whole lot of property and flood the market with some availability, it could happen. So I actually...
Well, yeah, but can you honestly see a place in Smithfield going for $1 million? Now,
I'm not going to answer that, but...
No disrespect to the people who live in Smithfield, but you got the median house price in Smithfield sort of around the high twos. You're looking at quadrupling the price over the next 10 years. It's just not going to happen.
Okay. Quick one on interest rates, because we've got to get to the next segment.
Yep.
Quick thoughts on that?
Interest rates going up. I reckon the Reserve Bank will move next month, being purely driven by the resources sector. You've got everything else is saying interest rates, all the other lead indicators such as consumer sentiment, business sentiment, retail sales are all down. That should indicate the Reserve Bank sitting on their hands or moving interest rates downwards, but resources sector is just driving the whole thing.
So they're going to go
up.
Right, we'll back to that in a moment, but let's go behind the blinds and look at some property.